think, act, and prosper. You are now tuned into the Money Level Show.
Go ahead, Ben. I don't know if you had any thoughts or wanted to share.
It's actually quite topical. You guys already answered about 3 or 4 of my questions, but the reason I have grey hair as a 32-year-old is because I'm so far down the political risk situation. I don't even know what mainstream looks like anymore. But I woke up to news this morning of a coup in Gabon, where I have some invested interests. Lula, the president of Brazil, is talking about, let's say, tax reforms. Am I allowed to ask about oil and gas stocks? Because that's actually my favorite sector.
It's the sector I grew up in. It's one where I actually know a lot, as a purport to know something.
Excellent.
Go ahead. I may learn something.
No, great. If we're talking about some of the best in class, I look at and tying into investors' perception as to political risk. How do you view Chevron and Exxon versus the likes of Petrobras, the Brazilian behemoth, which is trading, as I understand, roughly a quarter of the valuation of its North American peers? Do you have any vested interest in Petrobras?
I'm a Petrobras shareholder. I'm an Ecopetrol shareholder, which is, sort of Petrobras light. I'm a large Exxon shareholder. I'm a smaller Chevron shareholder, and I look at them through different lenses. If you can divorce yourself from the fact that Petrobras is going to exist for the next 3 years in a regulatory climate that's hostile. Lula, in order to keep his campaign promises, is going to have to steal more from Petrobras and from Vale. That's a given. But the valuation, I think, overstates the risk. The second tier asset that Petrobras has, upstream asset, which is the Campos Basin, is the equivalent of being the dominant American player in the Gulf Coast 40 years ago. It's an amazing piece of geology that is dominated, at least physically, maybe not intellectually, but physically, by Petrobras. And for them, it's second place to the Brazilian offshore. The part of the Brazilian offshore that scares me a little bit, no, it scares me a lot, is the technology of drilling massive subsalt deposits, deposits that were trapped by the presence of salt domes above them. The opportunity for Petrobras is that these salt domes there are enormous, and they are unexplored, and the traps below them are prolific. The challenge that they have is that the salt caps are mobile. So you are drilling a hole in perhaps 1,000 meters of water, perhaps more. And that drill stem is then going through 300 or 400 meters of salt. And that salt is mobile. It's moving. And you need to keep the drill stem from getting snapped by this mobile salt. I know it happens. I know it has happened. I have no earthly idea how it happens. And because I have no earthly idea how it happens technologically, it scares the hell out of me. I ought to be content, personally, to look at the return on capital employed that Petrobras has enjoyed in the subsalt and forget about having technical worries as a non-technical person. But I can't bring myself to do that. What you say in terms of the financial metrics is absolutely true. Petrobras is gushing cash in a positive sense. They are performing reasonably well upstream, which they haven't always done in their history. Remember that this was formerly a government bureaucracy. It was in effect run by a coalition of the post office and the school board or something like that. That's begun to change. There is a professional technical class in Petrobras. I watched them operate in Nigeria. They're quite good. 2, their downstream operations, their refining operations. Let's just say there's room for improvement, but they're improving. And their retail operations, which is to say their gas stations in Brazil, are a wonderful franchise. And I think if you believe that Brazil will do well, I think Brazil's going to have 2 or 3 challenging years. And then, as Brazil always does, they're going to come out of it. I think their Brazilian franchise in refining and marketing is worth more than the market thinks it is worth, particularly because the market thinks it's worth nothing. And I think that their upstream assets are very understated. I don't think with Petrobras that you get what you get in Exxon, which is to say best of breed capital allocators. I think if you said to the people at Petrobras that you need to rank every capital investment against the return on capital employed on a per share basis of retiring shares, that they would look at you and scratch their head. If you said the same thing in Irving, Texas, they would say that's written on the first page of the Exxon Bible. They are superb capital allocators going back a very long time. So I think when you're talking about those companies, you need to talk about them in different breaths. They need to fit in different portfolios, or at least in different parts of the same portfolio.
Okay, certainly a fair point. How much weight do you give to what Petrobras has done in terms of securing offshore drills and their contracts? If we're looking forward into the next decade, let's say, where the demand for oil will continue to grow and we're getting a little stretched on the supply side, one of the sectors that looks very good is offshore. Their break-evens have dramatically come down since a lot of the restructuring of the balance sheet from 2020 onwards. Yep. Is that an X factor that Petrobras has that perhaps some of the other companies have been a little slow in allocating their capital towards?
Hello everyone, sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
Yes, Petrobras has been willing to allocate capital both to a fairly aggressive expenditure schedule offshore, but more importantly, they've had the balls to drill the subsalt. They have overlooked the technical difficulty that scares the hell out of me, and at least so far they've made it work. My only hesitancy is I don't know how it works. Clearly, what you talked about, which is to say the interplay between the balance sheet and the income statement, means that unlike many of their global peers, they have invested sufficiently in maintaining the resource base, which can maintain the current cash flow that they enjoy. In addition, I think that there has been a maturation in their geological and engineering staff to the extent that they're confident enough in their ability to develop the subsalt that they're doing it. And by the way, this is probably not the only terrain in the world where you're going to see mobile subsalt traps, including in the deep Gulf of Mexico. And it may be, I'm not saying that this is going to be true, it may be that you're going to develop intellectual capital at Petrobras that you are able to use in other terrains. Not that for the next 10 years, they aren't going to have ample opportunity offshore in Brazil.
Mm-hmm. Y'all just talked over my head, man. I'm gonna have to go do some research on salt drilling and everything, Rick. This is the micro we talked about.
Well, Daryl, this is actually the business I grew up in, the oil and gas business. And it's a business that, in addition to the fact that it's treated me very well, has fascinated me for more than 50 years. I'm absolutely fascinated with all of the upstream aspects of the oil and gas business. And sadly, you get me started, as you might learn, you can't shut me up on that topic.
No, it's good. It's more for me to dive deeper. So speaking of just growing up, I've been looking at Devon Energy. Me being from Oklahoma City and them being based out of there. Do you have any thoughts on Devon Energy? I've been seeing, they're quite a bit off the highs from the last year, and they pay a really good dividend. So what's your take on it?
Well, the fact that they're off the highs, I look at as a very good thing. If I like a company and it falls in price, I regard that as a sale. Most people don't. Now, we are still in the United States investing a rather large number in sustaining capital investments in onshore shale production. The byproduct of drilling those oil wells out in the Permian and up in the Williston is byproduct gas. And the production cost producing that gas is about zero. If the producing company can sell that stuff for $4 a thousand, they do it. If they have to sell it for 50 cents a thousand, they do that too. And what that means is that we have a surplus of gas in the United States, gas being Devon's principal commodity. The weakness in gas prices has hurt both the income statement and the public perception of Devon. The other side of the equation, though, Daryl, is the artificially low gas prices that we're seeing in the United States are stimulating demand for gas, and more importantly, stimulating infrastructure construction around natural gas gathering systems, natural gas storage systems, natural gas liquefaction systems, peaking plants built for natural gas. And we've seen an absolute resurgence in the U.S. petrochemical and fertilizer business as a consequence of natural gas. All of this augurs very well in the intermediate or long term for overlooked, underloved natural gas producers in the United States. And the poster boys, there's two for overlooked, underloved natural gas producers in the United States, are Devon and Equitable.
Mm-hmm. Is there, do you have any, so like I know last year, the whole issue with Europe and, when we had the Russia-Ukraine war, and I think they had a hotter, warmer winter last year, and we're kind of getting back to that time frame again, and not sure if it's going to be colder or what. Do you have any take on like how natural gas may fit in that scenario if it is like a colder winter in Europe?
I don't. I've at age 70 stopped thinking in 6-month or 12-month terms. I think in 60-month terms. And it really sounds callous because I know that many people think in terms differently than I, and I genuinely feel sorry for them. But money's made by compounding, and compounding takes time. I have no idea what the winter's going to be like in Europe, and I could study European weather patterns till I was green or dead, and it would have no impact. If I can study durable competitive advantage or some other aspect of the micro, there's a chance that I could get close to a right answer. I'm not putting down the question, Daryl. I'm simply saying that in the way a contrarian has to think, what happens in the 6 months to 12-month time frame is sadly, other than psychologically, completely irrelevant. The fact that we're building LNG export facilities in the United States like mad, and energy short countries like Korea and Japan, Taiwan, Germany are building natural gas import facilities like mad, is something that I can put my finger on. And I can't put my finger on what European weather is going to be like next year. I can't put my finger on when the insanity between Russia and the Ukraine is going to be over. It's just way above my pay grade, and so I don't try.
If I'm not mistaken, in the past, I've heard you speak about the fact that you believe eventually gas being a globally fragmented market will start to converge, and that the US certainly would be in a great position to capitalize from the arbitrage between, say, Henry Hub and Dutch TTF.
Crazy, the arbitrage right now. It's just insane.
I have my eye on a company that has spent billions in CapEx. It's now about to have that CapEx turn into revenue, according to management presentation. The company is New Fortress Energy. I'm just wondering, given you guys are talking about this, if there's a chance you've heard of the company, or if you have any thoughts on New Fortress Energy.
I don't know New Fortress well enough to comment. I've followed, I followed particularly in that theme Cheniere, because decades ago I wrote the Save the Company check in Cheniere. I've now listen, I'm long gone as a shareholder there. But it and you
was
know
that before Carl Icahn took an interest in the company?
Well before Carl Icahn took an interest in the company. Carl Icahn is not involved in writing Save the Company checks. He's at a different part of the value chain than I. I followed in your country Woodside a bit for 35 years, more closely now with their acquisition of the BHP oil and gas assets. I think you're in the beginnings of forming a mini major, which I think is really cool. New Fortress I'm aware of, but I don't know enough that I would burden our audience with any comments on it.
Yeah.
Fair point.
Well, Ben, you got anything to add before we wrap up?
If I could squeeze in, I wanted to butt in before, but I didn't want to be rude. We went through the levels of the beta and the alpha, and then into the major plays and the micro. In uranium, we spoke about some of the majors in the oil and gas. A good friend of mine, who is a very decent capital allocator, Josh Young of Bison Interests, has been pounding the table on small cap oil and gas plays, particularly in Canada. Just wondering if that's caught your attention, Rick, the likes of, let's say, JRNGF Energy, tremendous management team doing accretive acquisitions, investing in power generation, where I see Alberta, let's say, could use a little more power generation.
Right.
Just wondering where you see any value in the small cap end.
I completely agree with him, and that's frankly the small cap, in my day sub 250 million market cap, now sub $1 billion market cap. That's a wonderful alpha opportunity. What I found talking to generalist audiences on channels like Daryl is that I am better off starting people out with bigger names. I think, in particular, if you're concerned about when the Canadian energy scene turns around, which is a different way of saying when Trudeau is deposed, that you have a time value of money problem. With Exxon at a 5 or 6% dividend, the dividend obviates the time value of money concern. The second thing is that understanding the junior oil and gas sector, the way that I've excelled in that sector is I've worked harder than my competitors. For me, it's always been a pleasure. It's always been a joy to do that. But I understand that I'm talking to an audience that has families, that like to golf, that want to read some books, and are perhaps less willing to do the work that generates alpha. To the extent that people want to generate alpha, I think probably that the greatest alpha in the resource space is in the uranium side. But I think that the second greatest alpha in the resource space that I know of is in the Canadian juniors. The reality, which is to say the incredible reservoir of intellectual capital in the Western Canadian Sedimentary Basin, stacked on top of spectacular geology, is only held back by Canadian politics. And it's interesting that Canadian politics should hold them back. The only thing Canada does well economically is sell oil and gas to the United States. It generates all the surplus in the country. The idea that this moron who runs the country said that there was no business case for liquefied natural gas sales from Canada to Europe is, on the face of it, incredible. As an American, I guess I'm happy. He's indirectly subsidizing the United States by giving us the whole market that we ought to have to share for him. But I stray from the question that you asked. The sub-billion, sub-2 billion market cap oil and gas space is truly spectacular for people who are seeking alpha. There are companies there that are selling at 30% of PV10 NAV. This is insane. some of them deserve to be trading at a discount because they're redistributing so much capital to their shareholders by way of dividends and buybacks that they aren't maintaining their sustaining capital, which is to say that their buybacks are cannibalizing the companies. But there are others that are generating free cash and using that free cash to take advantage of a politically inspired market downturn. And they're building very fine companies that likely will become massive, or in the other circumstance, will be taken over by larger companies with a lower cost of capital. Both good outcomes for investors.
That's good. I'm gonna rewatch this video probably about 3 times. For those of you in the audience that need to rewatch this, I'm right there with y'all. A lot to learn in this video. Appreciate you, Rick, for giving us more information to go and do our due diligences, which is very important. So, Rick, you want to share about your portfolio rankings and such, where people can find you in the Rural Classroom as well?
Yeah, 3 commercials, Daryl. Thank you for the opportunity. The first is the Rural Classroom. Go to the Rural Classroom. People have been asking me to write a book for years. I'm not going to do it. I'm going to do 60 how-to segments, half an hour long at the Rural Classroom. 11 of them are done. We're discussing various topics, various specific topics of natural resources, and it's all free, no obligation. The second is, if you care what I have to say about natural resources personally, go to my website, ruralinvestmentmedia.com. List your natural resource stocks. If I know them, I'll rank them 1 to 10 personally. If I have comments that I think are valid on individual issues, I'll make comments. Finally, and I can't resist this, I'm in retirement starting a new bank, Battle Bank. If for any reason you're uncomfortable with your present bank, and by the way, you ought to be, either go to battlebank.com or at ruralinvestmentmedia.com. In the question and comment section under the rankings database, simply write bank.
All right. You all have heard me talk about Battle Bank. I'm going to keep talking about it. I'm going to keep sounding the alarm. We need to get appropriately compensated for our deposits. So, yep.
You do.
All right, Ben, anything to add before we close?
No, thank you very much, Mr. Rule, for sharing your wisdom as always.
Keep it direct, please. I already feel old enough.
All right.
Thanks, Rick.
Thank you.